Aloha, everyone, and welcome to Java. Thank you again for joining me. I hope you got some nice, fresh, hot coffee for today. It's going to be interesting. This is for Thursday, and it's October 5th, 2023. So, we hit some extreme risk levels yesterday. It's come down since then, but it's still up in that red territory at 314 at the moment. So, as you can see, with the United States, the equities, and then also in the futures, it has come up a bit. We did have a bit of a recovery, kind of a consolidation, but we were expecting that because the dollar and the 10-year were hitting resistance at those upper levels. So if it continues here and consolidates a bit, it will get ready for another move higher, which would again put stocks under pressure. So the feeling going into today, the sentiment is mixed. If I had to say neutral, negative, we are still in a larger downtrend. So that being said, with things being negative, there is still a possibility of a squeeze, or if the plunge protection team were to come in on any larger downside moves. So I do urge caution with your shorts. Just be able to move, scale in and out, all of that good stuff, not financial advice. But I will be probably sitting on my hands and waiting for a little bit more direction today. So we do have initial jobless claims coming in. It's going to be a little while here, but prior to the market open. And we've got a few Fed presidents speaking today. Interestingly, quarter after noon, we've got Barr speaking on cyber bank risk. So that could be really interesting and potentially market mover because we know what potentially has been happening with banks and what trouble they are in. And with these rates going up at such a rapid pace, they are imbalanced. Some of these banks have worse loans than the others. So we'll keep an eye on that moving forward. We were talking about both Bank of America as larger banks and Wells Fargo have weaker outlooks and their loan packages, a lot of things about them are not as strong as the other larger banks. So we've got our 30-year fixed right now at 7.7 for the mortgages, and that's pressure on the housing real estate market in the US. So we had this come out about the Treasury yields that they're a little changed after pulling back. They hit 16-year highs. They were hitting that resistance level. Nothing goes straight in one direction. So we'll watch that kind of consolidate a little more before a larger move. I expect Treasury yields will continue to go up. So, and possibly one more hike from the Federal Reserve. So we got these stories coming out. The private payrolls came out 89,000, which was weak. This is in contrast to the JOLTS number, which we know is kind of cooked. So they are saying there's a bit of trouble in the labor market, which we know. So this one is about talking about basically global trade. Global growth is what they stated from the UN, talking about it stalling and being divergent. So basically, what this means is that trade is slowing and some countries will be favored in these moves, and we already know which ones. We talk about them all the time. So those market rates, as they race toward that 8%, demand plummeting to a 3-decade low. That's how bad this is. They're also saying homes are now unaffordable in 99% of the US for average Americans. So, depending on how they, basically, with the average wage of Americans, they cannot afford purchasing a home at these prices. So, we had my friend Zero Hedge come out and he talked about the same thing that we are, and he brought the graph out that credit card spending unexpectedly plummeted in September. And this is partially in response to the student loans that are coming due, as well as other things that we've been talking about, the discretionary spending plunging, and they cannot afford these rates. So this now is in mainstream media that the US bond market is sending recession warnings. And this is about from Jeffrey Gundlach. So while I agree with him, my point on this one is that now people used to never watch the bond market. They used to not watch what the Federal Reserve would do. But now they're kind of keying in and seeing what is moving the markets. So we're going to have to be a little sharper on this to stay ahead of them because we want to be early on these moves. So with that, we also did see oil prices pull back. And we also saw pullbacks in the precious metals, which are a good buying opportunity in my opinion, particularly silver right now. We've got oil prices that did come back, but they're saying it's on demand worries, but it's just a natural price pullback. It's consolidating, and I believe oil will continue to go higher toward the year end, but we'll see. Nobody knows for sure. Have a couple of other, these are kind of in our trade and currency wars. The ruble returning to the landmark US dollar rate. So it's coming back on level with strength, relative strength. And then the other story going along with that is that the ruble exchange rate to dollar doesn't matter according to the Kremlin. And that's a pretty bold statement coming from them. Basically, what they're saying in his statement that measuring up to other currencies is a quote unquote remnant of the past. And the reason they are emboldened in saying these types of things is that recently, with all of the sanctions, which used to be powerful in the past, Russia is now just trading around them. So they don't particularly care if there is dollar strength or not. They no longer need that petrodollar. So that's kind of a key note to see. So I've got this graph this map. I wanted to bring this to you. So it's supposed to be for inflation and prices, saying high food inflation is still high around the world. So this map came from the World Bank Food Security Update. But I want to put this in a little bit different light because they talk about inflation. People forget what that actually is. If you look at the colors on this map and those that are experiencing with the inflation, basically, it is strength of currency. So how much can you purchase with the strength of your currency? And if you look at the areas with the different colors, you'll see that the ones with stronger currencies experience less food inflation issues. So this could basically be converted roughly to a currency strength map. And so just to put that thought in your mind, wanted to bring that to you. So we've got another story on the CBDC front, this time coming from Argentina, but still from central banker. And we know central bankers all kind of quack like ducks. They all act like ducks. Want to keep it clean here. So we had the director of the Central Bank of Argentina is talking about supporting a digital peso. So they want the CBDC as a remedy for their national economy. If you are not aware, they are experiencing kind of hyperinflation issues and rapidly losing a lot of their country's strength. So what he brought up is he's saying that it could stabilize the economy, but his method is talking about the key feature of a CBDC is its traceability and that it would help the government collect taxes. And I can't disagree with this more. So yes, it would help them collect taxes, and that's why I want to bring this up here, is that is their point. But if you want to fix an economy and you're crushing people with inflation, collecting more taxes from them is not a really good plan in my opinion, but I'm not a central banker. So I've got one other story I wanted to bring up because I would like to know your opinion on this one. Japan's Fukushima, we know the nuclear plant melted down when there was a tidal wave that hit. They're starting their second release of treated radioactive wastewater into the sea. And their argument is basically that it has been treated, the radioactivity has been brought down, and they are basically diluting it. And by diluting it, that it's safe to drink. So I have my opinion on this, and I kind of disagree with this, but they are basically pushing this narrative because they are running out of capacity in order to store this radioactive wastewater. So let me know what you think of that in the comments. With that, if you don't mind hitting the like on your way out, I want to wish you all a wonderful trading day, or just a wonderful day in general. And until I see you again, my friends, stay free.